Hey guys, it's Jamin Kirkwood with Secure Financial Management, and anytime we have a day like we had in the stock market today, I'd like to get a quick video out to you guys, just share our thoughts as to what's going on. We've had lots of calls, as you can imagine, today to the office, calls and emails, asking to share kind of what's causing this, what's going on, is there anything that we need to do? And so I want to address a couple of those things in just this quick video. And you'll see the title of this email, or the title of the video, however you're watching this, is the two things that are affecting the market and why one of them doesn't matter. And I don't want to be flip when I say that, that one of them doesn't matter. Obviously, if it's moving the markets, there's something going on there. But I want to talk about whether it matters or if it's significant. And they might sound like the same things, but I don't think they are. Okay, so the two issues that I want to address with you today, one of them is interest rates, which is one of the things that's affecting what's going on in the market right now. The other one is trade, and particularly China. Let's talk about interest rates first, okay? If we look at the treasuries, 2, 5s, 10s, and 30s, they've moved pretty significantly in the last week or so, right? And this sell-off that happened today was obviously the most significant, but it's been kind of a rolling sell-off for 3 or 4 days at least now, and it got really bad today and intensified today. It's around interest rates and the Fed doing what we call normalizing, right? Getting back to a normal interest rate environment. What the market has gotten used to, and society in general, I think, right, has gotten used to, is this emergency interest rate situation that we're in, right? I know some of you guys watching this video, you have vehicle loans that are 1%. You've got your homes financed at between 3 and 4%. That's not normal, right? If any of you remember back to maybe if you bought your first house in the 80s, what were you paying? 9, 10, 11, 15%? That's not normal either, right? That's one extreme, but we're in a lower extreme right now. And as we start to move back to a normal interest rate environment, this is going to happen. It stinks. You don't like seeing it on your accounts. I don't like having to manage it, but it's the way it is, and that will happen as we start to progress back to a normal interest rate environment. The last video, if you watched it, that I sent out a few weeks ago, we talked about, is the market changing? It's the longest bull run in history. Is it done? And I said, look, it's kind of like a hurricane, right? Once it moves off the ocean into the land and it loses its fuel source, it dies off pretty quick. Raising interest rates back to a normal interest rate environment is not taking away the fuel of a stock market expansion, right? You will see things like this, things that are volatile as we transition back into what we consider a normal interest rate environment. The markets in true form overreact like they have today in particular and over the last few days. That will happen. It's one of the things that comes along with investing, but is it something that is significant? And so it matters, obviously, because look what happened, but is it significant? Is it a fundamental change? We don't see it that way, right? We're not close to being in a high interest rate environment. We're transitioning from a normal interest rate environment, or from an emergency interest rate environment into a normal interest rate environment, and these sorts of things will happen. The second thing that I want to talk about, and I think this does matter more, not in do we need to change our investment strategy right away? More on the fact is keep an eye on it and see how it develops, is what's going on with China. There's a lot of trade tension going on with China that maybe it will be resolved. Maybe it'll be resolved tomorrow. It doesn't look like it though, right? It looks like it's going to be a longer protracted sort of event. The whole issue with Mexico and Canada just got resolved a week or 10 days ago. That's great. China's a different animal. Right? It's a different type of thing, and I was talking to somebody about it today, and they said, what's the 800-pound gorilla in the room? I was like, it's like the 800-pound panda in the room. I'm just joking. That doesn't really, it's probably not funny at the moment, right? But I said, it is. It's the 800-pound panda. Is what's going to happen with that, right? How do we get to a resolution? There's really two superpowers around, and even if you forget the military side of it, just economically, right? There's two economic superpowers in the world. We're one, China's the other. And those two guys not being able to agree, or potentially going to war economically, could be a concern and something to keep an eye on. So that's something that we're keeping an eye on here at Secure Financial Management with our clients and the portfolios that we manage. Interest rates, it stinks what's happening. Nobody likes it, but fundamentally, it's not taking the wheels off the cart. If you want to put your focus somewhere and say, what should I be worrying about? What should I be looking at with my portfolio of my investments? Look at trade, look at what's happening in emerging markets, look at particularly what's happening in China, because that's what we're doing with our investment portfolios right now. Just want to get those quick thoughts out to you guys. As always, none of this should be taken as investment advice or a recommendation. If you have some questions about any investment or economic questions, please give us a call here at the office, 210-428-6250. We'd be happy to speak with you.